Welcome back, ladies and gentlemen. Now let's do our level 6 P&L. So on the level 6 we'll be doing the coding for earnings before depreciation, interest, tax and amortization. So for the earnings before interest, depreciation, amortization and tax, so that will be our level 6 line of code. So let me take you back to where we are doing our code. So here we'll again I will comment out earnings before interest, tax, depreciation, amortization, and then I will comment out the interest part. So after having done up to level 5, of which level 5 was indirect expense, so now we want to get the earnings before depreciation, interest and tax. And to get the earnings before interest, depreciation, amortization and tax, we only need to net off indirect expenses from our other income and the net margin. So from the net margin and other income, we'll net off direct expenses to get the earnings before interest, tax, depreciation and amortization. So our first line of code here, we are saying that net margin is equal to level 5 dot log level 5 category is equal to net margin. So we just want to have a subset of data where the category is net margin. So I can show you this by example. So when we print this net margin, you'll see what we have. So let me try to run the code. So the period is 1, and then the financial year in review is 2017. And now we want to see our net margin. So this is the value of our net margin. And then we also have other income. So we are also trying to get a subset of data for other income. It's the way we've done for net margin. The same applies to indirect expenses. So indirect expenses, we are trying to get a subset of data for indirect expense, of which we are only taking the last row within indirect expenses. When I come down here and print in bracket indirect underscore expense, indirect expenses, you'll see what we have as indirect expenses. We just have the last row from the data frame of indirect expenses. So the period is 1, and then the financial year in review is 2017. So this is what we have as total indirect expense, and then Then down here now we are trying to negate the values of indirect expense. So we are saying that indirect, rather down here in this next line of code, we are saying that indirect expense is equal to indirect expenses. So you can see what we have here as this variable is different from this other variable of indirect expenses. So we are saying indirect underscore expense is equal to indirect underscore expenses, then in bracket period actual times -1, then indirect expenses period budget times -1. What we are trying to do is to change the values, the numerical values of indirect expenses to negative, so that we'll just add the indirect expense with the net margin and other income to get the earnings before depreciation and amortization. So when you see here, I'm trying to multiply the numerical columns with the negative. I'm trying to change the values of indirect expense to negative values as opposed to having them as positive values. So again, down here we are saying direct expense in bracket period actual, and then indirect expense period budget, indirect expense YTD actual up to total last year is equal to indirect expense. So whatever we've done up here, this variable that we've used up here, and then change the numerical values of indirect expense to negative value. So we are saying that now the indirect expense now is equal to that those negative values of that we just changed up here. Remember how we use variables? Let me just show you this by example. Today we can say that, rather now we can say that. So what you're saying, you're trying to say here, you're saying that let me give you an example. X is equal to 2. Then down here you're saying y is equal to x times -1. Then down here we are saying that x is equal to y. So by doing this, the way we've arranged the variables, we'll have changed the value of x from 2 to -2. So such that now when we print the value of x, we should be getting -2 as opposed to getting 2. So when we print this one, when we print x down here, see what we'll get. So the period is 1. Remember, we are only looking for the value of x. We are printing the value of x. What we are supposed to get is -2 as what we are getting down here. So that's why I'm trying to explain that indirect expenses, we are trying to multiply the numerical values with -1 so that we can get those values as negative. Then when we come down here now, we are changing the direct expenses is equal to those numerical values, rather those negative numerical values as opposed to what we had earlier as positive values. So down here you'll see that we are saying direct expense in bracket period actual, direct expense period budget, indirect expense YTD actual, indirect expense YTD budget up to indirect expenses total last year is equal to indirect expense. Remember this variable here, which is up here, we had changed the values for indirect expense to negative. So again, we are picking direct expense, this variable up here. We are using it down here, but now we are taking the values of this other variable for indirect expense, which is negative. So the values of indirect expenses here will be negative. So let me just do away with this explanation. I wonder what was that. Let me just do away with this. Explanation. So down here now we can yes, down here now we can now do the calculation of earnings before interest, tax, depreciation. And then lastly, we are saying level 6 is equal to PD dot concat level 5 with EBITDA. So up here we are trying to get the value of earnings before interest, tax, depreciation, and amortization, which we picked. When it comes to indirect expenses, we just picked the last row, and the last row was the total indirect expense. So with the last row, we have now the net margin, we have other income, and also we have the indirect expense. And then the indirect expense has been changed to negative values. So meaning we have the positive value of net margin, and we also have the positive value of other income. We also have the negative value of indirect expenses. So when we add all these three, when we add the net margin, other income, and then we also add the indirect expense, which have negative values, we'll be getting the earnings before depreciation, interest, and tax. And then that data frame for earnings, depreciation, interest, and tax, we'll only pick the last row, which has the value for the earnings, depreciation, interest, and tax, and then we'll concatenate that last row with the level 5. So let me just try to print EBITDA before we pick the last row of that data frame. So down here we'll say print in bracket EBITDA. Then let me run that code again. So the period is 1 and the financial year in review is 2017. So now you can see we have we have 4 rows. We have 0, 1, 2, 3, and these are the row where we have EBITDA as a category, as ledger, and then as numerical values. So after this code, we want to drop index again, and after dropping the index, we just pick the subset of data which will be the last row of that data frame. So we'll pick only these values for earnings before depreciation, interest and tax, as opposed to picking the whole data frame from a net margin, indirect expenses and other expenses. So let me just print now the earnings after tax, just after running this code for EBITDA.12. So let me print EBITDA. Period number is 1 for January, and the financial year in review is 2017. So now what we have as earnings before interest, tax, depreciation and amortization is this what we have here. So this is our EBITDA. So now we need to concatenate this data frame with the level 5 so that we can have level 6. And this is what has been done up here. So now we have level 6 is equal to pd.concat level 5. We want to concat level 5 with the EBITDA. If the axis is equal to 0, then we'll reset index and again drop index. So let's now try to print a level 6. Remember the indirect expenses, we only picked we only picked a subset of value of the last row, of which the last row we had the total indirect expense. So that's what we'll have in our level 6 data frame, as opposed to what we have for all the indirect expenses. So let's run this code again. So period 1 and financial year in review is 2017. So now this is what we have as this is what we have as level 6. We have sales. We have sales, or the sales volume, sales, cost of sales, gross margin, direct expenses, net margin. Then we have indirect income, and then we also have indirect expenses as a blank row first. Then we have these other categories of indirect expenses with their values. So I was trying to tell you that when we drop this subledger, we will not have this lengthy rows of the data frame, but that will come later. But just to show you that how it will make sense, let me try to drop. Let me try to drop index and subledger. So the S is capital sub underscore ledger. Then the axis is still 1. Then again, let's try to run that code again. You'll see what we have. So the period number is 1, and then the financial year in review is 2017. So we are being told we got the multiple values for the argument axis, so I need to put these ones in square brackets as opposed to having them in parentheses. So again, let's try to run that code. So there's still code analysis being performed. So apparently we are in inspections. So now the period number is 1. The financial year in review is 2017. So now you can see what we have. Okay. So it's a bit shorter, but not as short as what we expect, because in our final P&L, we'll not have the category column, but we'll just have the ledger. So these are the many rows should not worry you, because this ledger column all will be grouped together, and we'll have fewer rows as opposed to what we are having now. So this was level 6. Let me just bring back subledger, because we have a code for dropping this in our final product. So that was level 6 of the P&L. Again, we'll stop at that. So when we come back, we'll be doing the interest, and the interest element will be level 7. Then we'll move up to level 10, where we'll get our final P&L. So thanks a lot for watching, and let's meet again in the next video.